Welcome back. You're watching India Closing, the last half an hour of trade this afternoon. We have with us a very special guest, Shiv Sehgal, President and Head of Nuvama Capital Markets, joins in. Shiv, before I jump into to talk to you about what's happening with the markets, a quick tell us about how the conference has been that's underway. It's, of course, regarded as a prestigious conference in that sense. But give me a sense of the attendees, what are management's feeling, how is India doing post third quarter earnings?
Firstly, thanks a lot for having me on the show. I think it's really good to see what's transpired over the last 3 days at the Nuvama conference. We've been hosting it for 20 years, and I must say that the entire investment thesis from both global and domestic that we continue to see being written in the press, whether it is Japan, whether it is India, the two darlings of from investor perspective, I think the exuberance that the FIIs have shown in the last 3 days, and corporate India coming out and echoing the sentiments that you guys have been talking about the show as well in terms of positivity, growth happening, profitability happening. It was a confluence of a lot of factors kind of showcasing again the fact that India has got both cyclical and structural tailwinds behind them, and it's been a phenomenal attendance as well. We had almost north of 1,000 investors over the last 3 days, meeting more than 200 companies. And as I said, companies echoing the positive sentiment that we've been talking about from an India growth story.
Shiv, where is the excitement? Because if you look at stock performance and street euphoria, everything that is government focused has got a leg up over the last couple of years. Sectors like defense, infra, railway is where a whole lot of money has been flowing in recently. There's also hope and expectation that private capex should start seeing a leg up as well. Is that what you picked up when you spoke to investors, spoke to companies? Any early signs of private capex seeing a pickup? And also, would you think that private capex in the government-focused sector could actually be the next play?
So very well rightly said. So I think that was a theme that was discussed multiple times over, that there has been a little bit of disappointment on the private capital expenditure side. And but the confidence that corporate India is showing today, and I would like to tell the audience that if you look at just terms of profitability, profitability is for corporate India is up almost 50% since pre-COVID levels. Also, free cash flows are up almost 3 to 4x at corporate India levels. So it is, and it's not just the bulge bracket. Historically we have seen the large 1 or 2 companies in every sector doing well, but here we have also seen the mid and small cap space in India, both quality and quality, in terms of the breadth of the market seeing a lot of interest. And I think post these elections or the May event, as you may call it, I think you will see a very large impetus from the corporate India coming back into the private space as well. And I'm pretty sure that private capital expenditure will happen. There was a lot of talk about it at our conference as well. I think we can see the confidence that companies are seeing in the economy, and I think it's just a matter of time in the next 2 or 3 quarters that we'll start seeing in different sectors coming up as well.
Sure, Shiv. Harsh also joining in. I also want to try and get your take. We've seen, especially within the mid-cap and small-cap space, a decentish, more than decent, a very strong rally that we've seen. How has that been viewed? And how are valuations now looking given that kind of rally? How should one approach companies in this market? What sectors should one look for?
So Harsh, very valid point. I think everyone is aware of the performance that the small and mid-cap space saw in the last 9 months. And I've been saying that there will be some consolidation given the run-up and the outperformance that happened from March of 2023 till December. But the reality is, if you look at the earnings and the growth stories and the gems that are being found within that space, we continue to remain that, and so was the investment community. A lot of historical large asset allocators that have only looked at the large liquid names in India, the MSCI India names, even those investors coming out and asking questions that where can we find the next multi-bagger, and willing to come down the curve in terms of liquidity to pick up, alpha or outsized returns, also lends credence to the fact that I think this rally is not just euphoria about the last 12 months. Post some time consolidation, everybody's been kind of waiting for a pullback to put further allocations and put further money in. I think a healthy consolidation for India, corporate India, would be much more welcome from the investor community. I don't think it's happening. I don't think it's about to transpire that way. I think investors will continue to chase at a higher level, and as a result of which, I think as long as earnings and cash flow and profitability continues on the uptrend, valuations don't remain a concern just yet. We are too early in the bull cycle for that, in my mind.
Sure, take your point. Shiv, I want to switch over to macros also a little bit, because I'm sure lots would have been discussed over the last 2 to 3 days. Now, with regard to the most recent numbers, as well as some amount of skepticism as to whether the Fed will cut by 75 bips, by 125 bips, what's the sense like for 2024? Because I think at the end of 2023, markets were leaning on a 100+ basis point rate cut. Maybe not so anymore?
So Harsh rightly pointed out so. I think, that by and large, the markets are a forward-looking mechanism. Investors, yes, I think there was an element in December that everyone was expecting a March rate cut. I think that's been priced out. But again, at the same time, I think most are very cognizant of the fact that it is not a matter of if the Fed cuts, it's a matter of when. And if I look at the most recent probabilities happening post the CPI event overnight, I think, the March rate cut is a 10% probability in my mind. The May rate cut is a 40% probability. But the June rate cut, the market is pricing in a 100% probability event that by June we would definitely have had one rate cut. And if you look at the Fed sensitivities, I think the market by and large and the market participants are still factoring in 90 basis points of cuts over the next 9 to 12 months. So as I said, I think, yes, there was a little bit of euphoria that the Fed is about to, the pivot in the monetary policy is about to happen, the dovish pivot is about to happen, and, I think the global markets by and large were getting helped by that. But in India, as I said, the structural tailwinds and the cyclical story is so intact that in my mind, the Fed will cut rates in a matter of 1 quarter or 2 quarters. That will provide a further impetus to the growth story that's happening in India. So in my mind, as I said, I've been continuing to say that, India remains a buy on dip market for the foreseeable future. And I think everyone will be amazed at the kind of performance that will happen from a macro standpoint in India.
Right. Shiv, I'll talk to you about your nifty returns in a minute, but just before that, because Harsh referred to the global setup, what does that mean for tech companies? Still a week ago, there was chatter on the street that, maybe the worst is behind tech companies, valuations are attractive, but the fact remains the US goes into election next year. No one has been committal or indicated of any green shoots, at least most managements haven't, at these earnings, at the earnings season that we saw. How do you approach tech? Now, today, of course, they're selling off on back of a delayed rate cut expectation. Would you play tech? If yes, where is the action? Is it the ER&D space? Is it sectors that are, creating tech for maybe defense, aviation, railways? So that sort of gives you a play between AI and sectors that are more domestic facing and future looking.
So I would definitely, first of all, that's a very valid question as well. I think you're spot on. The most interest rate sensitive sector in terms of market participation is, of course, the tech sector, and Fed pushing it out. You will see some consolidation or some profit taking given the run up that we also had. But I remain extremely bullish on the tech sector. We've been calling it it's an overweight at Nuvama as well. We've been saying that irrespective of how the politics plays out in the US, I think it's no doubt that the large conglomerates are still friend-shoring rather than offshoring. India remains, because of the demographic and the skilling that is happening in the tech sector, a very, very favorable play for most large companies and MNCs, not just in the US, but even in Europe, for that matter. I think we will see many order wins. Most of the commentary coming out from the large companies is still very conservative. You're absolutely right. But I do feel that as we get closer to the second half of this year, the order wins will continue and you will see performance. As I said, market is a forward-looking mechanism. I think the tech sector will start pricing in a much better economic environment for these companies, both in terms of profitability in the next coming few quarters. So we are very bullish on tech, and I personally remain very bullish on tech sector in India, especially on the services, and there's no doubt from the domestic side as well, but even from the export sector especially coming from Europe and US.
How do you feel about chemicals then in that case, Shiv? Do you feel like we're turning the corner here, even though we haven't seen too much positivity with regard to earnings, but they've been down and out for too long now?
So I think, in India, we always see these sectors, right? I mean, real estate was kind of in the doldrums for almost a decade, right? And then the last 3 years, we've been talking about the PSUs and the real estate transactions, and in terms of GST going up on a month-to-month basis. I think the chemical sector had a phenomenal 2 years during COVID. And given the run-up in the prices in terms of stock performances, it's bound to see some consolidation that we've been seeing over the last, I would say, 2 or 3 quarters. We think that the chemical sector is about to see a turnaround. Maybe we are a bit early in terms of calling it a turnaround just yet. Maybe it takes another quarter or two. But I think the correction that has happened and the consolidation that's happened, I would be dipping my toe in right now in the chemical space.
Got it, Shiv. Shiv, I want to, again try and understand your views with regard to the market as a whole. Now, it's going to be a year of unknowns, 2024. You've got elections in a record number of countries, rate cuts on the anvil. Again, a lot of unknowns there as well. Therefore, how do you view Indian markets given the fact that every dip is being bought into by a very solid set of DIIs? Even at any point of time, we've seen FIIs selling, it's been bought up by DIIs. How do you view this shift, if I can call it, in trend? And therefore, will this be a flattish kind of consolidation, or do you expect that from here there is more room for upside in the near term in 2024 than downside?
Harsh, again, great observations. Let me just kind of give you the big picture here, how I see things playing out. One, I think everyone should know that 2023 was the first year in almost 2 decades that the Indian markets, every subsector that we tracked 23 subsectors, every subsector closed in the green. So yes, there was an outperformance which was very broad and there was a lot of breadth to it. Second point which I want to highlight is that last year was a low vol, high return market. By and large, what we have seen in markets, low vol, high returns tend to lead to high vol, low returns. I don't think that this year will transpire that easily. I think, yes, you will see a lot more volatility, as in when that is derived through events like Fed moving out the rate curve, or political or geopolitical for that matter, that have been transpiring as well. Having said that, I think what India is seeing at the moment is that there's a lot of rotational money moving from one sector to the other, and that has historically always been the case in India. I think you need to stick to your high conviction, good quality, great balance sheets, growing companies. By and large, I still feel India will see double-digit returns for sure. I do feel as well, I think I may be a contrary here, that you will see some rotation back into the large caps as well. I think the large names, especially the private sector banks, have been consolidating for a while. I think you will see some rotational shift especially from new money coming in from FPIs. And we have been meeting a lot of new foreign allocators that have been looking at India but have not pulled the trigger. Right, I probably met 10 funds in our conference itself who have been coming to India but have not pulled the trigger and are about to pull the trigger very soon. So there is not only just about one FII or FPI selling to the other, but it's also the fact that there is new money coming into India. That added to the fact that we are seeing about 3 billion of domestic SIP money that you guys keep talking about, and we all know the stats now. I think if by and large you will probably see 60 to 70 billion worth of total flow of money coming into the Indian markets, and as a result of which I think I am a firm believer that liquidity and momentum drive everything, and we also have the fundamental and the whole macroeconomic drawback which is helping the Indian growth story. All combined, I think there'll be rotation among sectors, but the trend is up, right? And that is not going to get derailed. I think we all know that May is probably a non-event in terms of the investor probability event that people are putting in terms of elections. I think we all know what the powers that are going to come and win. I think what is more interesting is the policies and the next 10-15 year growth plan that our Honorable Prime Minister has talked about, that he will be unveiling in the next 3 or 4 weeks. I think that will be the next impetus to this market going up again.
Shiv, we'd have loved to chat with you longer. Hopefully we'll see you soon and have a more detailed conversation on this. We're out of time as we are running into closing, but thanks for joining us and good luck. In the meantime, we've got Vineet and Ajit also waiting by. Vineet, I don't know whether you've been